Hello everyone, and thanks for watching Edupedia World Videos. In this session, we'll discuss about how to prepare trading and profit and loss account and balance sheet when we are provided with a trial balance and adjustments. And now, first of all, I have prepared the format of both profit and loss account and balance sheet. As I have said before in my previous videos, that whenever we have to prepare the final accounts, we'll open both PL and balance sheet together. Now here we are provided with few adjustment entries. So the very first thing we should do when we are provided with adjustment entry is to mark out all those accounts which will need adjustments. First of all, I'll start with those accounts which needed adjustment because of the element in the trial balance itself. So first of all, we'll mark those accounts. Suppose we have sales and we have sales return. So sales would be adjusted because of sales return. So we'll mark sales first. Then we have purchases return. So purchases would also be adjusted. Now we'll go to the adjustment entries. So first of all, we should pass on the journal entry for this. So let us first start with, let's first discuss how these journal entries for adjustments needs to be prepared. So first of all, we'll understand the impact of these adjustments on the accounts which we have. So here we have closing stock that amounts to 70,000. So first of all, let us understand what would be the impact of closing stock. Now closing stock is a kind of asset. So the first thing it will affect is the balance sheet, and it will come on the debit side of the balance sheet because it is an asset, as well as it will have impact on the cost of goods sold, because this is the amount of goods that has remained after the year of consumption. So what we'll do is to pass the entry in this manner. Like we'll have closing stock in the debit side because it is an asset, and every addition to an asset leads to debit, and to trading account the amount would be 70,000. You can also write in place of trading, you can also write purchases account. They both are valid. Now let us come to the second adjustment. This is to create reserve for bad debts and doubtful debts. So let us first understand the impact of a creation of reserve for bad debts or doubtful debts. Every creation of reserve becomes a liability for the company. Now, as it is a liability, it would be on the credit side, and every increase in the credit will have some debit on the other account. So here the debited account would be profit and loss account, and the credited would be the reserve itself, reserve for bad debts. The amount is 10% of the book debts. Book debts we have here is 82740. So the amount of reserve would be 8274, that is 10%. Now we come to the next adjustment. Insurance prepaid. Anything that is prepaid is said to be an asset for the company, because the benefit of the prepaid amount can be taken in the future. So prepaid insurance can be called as an asset, and that would cause a debit, and the account which would be credited is the insurance account, with the amount of rupees 50 as given in our question. Now we come to the fourth adjustment, that is rent outstanding. Any outstanding expense creates a liability, and every liability or increase in liability would lead to be a credit. So outstanding rent would be on the credit side, and the rent account would be on the debit side, because this is the account which has to be deducted as the amount of 150 has not been paid, still incorporated in the trial balance. So now we come to the last adjustment, interest on loan. So the loan amount is 15,000 and interest on loan is due at 6%. So we'll calculate the 6%. 6% of 15,000 is 900. So what we'll do is interest due again creates a liability. The amount is 900, and this interest would be added in the loan account itself. So now we have finished our adjustment entries. So what we need to do is to prepare the profit and loss account. Now let us start with the process of preparation of our balance sheet and PL. So we'll incorporate first the purchases accounts, what we have here is opening stock. So first we'll start with the opening stock. Opening stock, and take this amount. Next we have purchases. So we have purchases account, okay, so we'll write the amount of purchases, okay, but we have to adjust these this account for purchase return. So we have to incorporate another column where we can just calculate or make the adjustments. Purchases return, the purchases return amount is $1,550, and you can write the total amount of purchases here. Next we come to we have carriage. So we'll start with drawings. So drawing is an asset, so we'll incorporate that in our balance sheet. Okay, so we'll write, and drawings need to be adjusted from the capital, so we'll not we'll defer this one. We'll start with the next one, the cash at bank. So cash at bank is an asset, so we'll write cash at bank. We have to insert a adjustment column in for both balance sheet and liability, balance sheet and profit and loss account. Okay. So we start with cash at bank. The amount we have here is just I'm selecting the amount from the trial balance so we can minimize the chance of error. The next account we have here is bills receivable. So bills receivable is a kind of asset, so we'll enter that in assets part. Just take the amount from the trial balance. The next account is land and building. Since we don't have any depreciation in this, so we can just enter this in the assets part. Land and building. Take the amount from the trial balance. Okay, next we have here is furniture. Again, it is an asset, so we'll add furniture. We'll take the amount. Then we come to the next account, that is discount allowed. Okay, so what we should do about discount allowed? Any discount allowed is a kind of expense, so we'll incorporate that in expense part of profit and loss account. So we have to understand here that we have the trading part and the profit and loss account part. So in the trading part, we have to incorporate only the direct expenses, and in profit and loss account we have to incorporate the indirect expenses. So we'll incorporate discount allowed in profit and loss account. So I'm leaving some space for calculation. After that, I'm starting from here. Discount allowed. Discount allowed. Just taking the reference from trial balance. We have this amount. Okay. The next account we have here is bank charges. Again, this is an expense and it's an indirect expense, so we'll incorporate that in profit and loss account. Just take the amount from here. Next we have salaries account. Again, this is an indirect expense. Now, easiest way to recognize which is direct and indirect expenses, like whatever expense we have, either we produce it or not, we have to incur that expense. Those are indirect expenses. And if an expense occurs only when we produce, that would be incorporated in direct expenses. So next we come to purchases. We have already incorporated it. Okay, this should come in trading account because this is a direct expense, and it's direct expense only because if we require purchase, then this would be the case only when we are producing the goods. Next we have opening stock. We have already incorporated this. Sales return. So before going for the sales return, we'll go for the sales. So sales is a part of revenue and it comes under your direct income. So but we need adjustment for this, So we'll incorporate this amount and we'll deduct the sales return. This is purely a convention of deducting the sales return. You can also go for just incorporating that in debit side, sales return would be on debit side, purchases return would be on the credit side. Ultimately they'll get balanced, so there wouldn't be any problem. So we'll just take the amount of sales return from here and we'll write the balance here. So this is the balance amount. So after sales we have carriages. Carriage is considered to be a direct expense, so we incorporate that in trading account. We'll take the amount from trial balance. I'm just using the benefit of Excel, but whenever the student use a notebook, he should be very careful. He should be very careful in writing the amount, because that can cause error. Okay. So rent and taxes. We have rent and taxes. The amount is this one. So the next account is general expenses. Write the amount. The very next account is plant and machinery, which is an asset, so we'll make the entry in the balance sheet. So we come to the asset side. Take the amount. Now the next is book debts. Book debt is also an asset, but we have adjustments in debts, so we don't write this amount in the main balance. We'll keep it for calculation. So the next amount is bad debt. Bad debt again is under adjustment, so we'll write bad debts, but we'll keep the amount in the calculation part. So just write the amount, take this amount, and we'll keep certain space to incorporate the calculation and the adjustments. So next we have here is insurance. Again we have adjustment for insurance, so we would not incorporate this in main balance. Next we come to the credit side. We have capital. So capital is a part of liability, so we'll write capital. We'll keep the balance in the adjustment only. Capital always requires adjustment, so always be safe and keep some space below capital, and don't incorporate the capital account in the main balance at the very first site. Okay. So next we have discount received. Discount received is a kind of income for the company, so but this is an indirect income, so just incorporate it after trading account. Discount received. Keep the amount here. Then we have loans. Loans is a part of liability. Just write loans. We have adjustment for loans. As we have seen, like there was an interest due, so keep that for adjustment. Keep it open for adjustment. Next we have is purchases return. We have already made the entry. Sales, we have already made the entry. Reserves for bad debts. Reserve for bad debts should be incorporated in your liability side, so just go for this, add up in the liability side, or you can also call that the deduction is required from your balance sheet, but we'll have some adjustments, so we'll not incorporate that. We'll enter that in our profit and loss account. Okay, the next one we have here is creditors. Creditors are part of liabilities, so we'll enter that on the liability side. So we have creditors, and we'll write the amount. We'll take this amount. Now what we need to do is to make the adjustment, so we'll start with the capital part. So what we need to do is to start with the capital, and what we have here for the capital is we'll have to add net profit. For that we have to calculate the net profit first, so we'll keep this open. We will also have drawings, so we have to deduct drawings. So what we can do is just write the amount of drawings. So what we have drawing here, so just incorporate that. We took the amount. The next we can go for the adjustment of insurance. It's pretty easy. So let's insurance and deduct the insurance premium prepaid. Insurance prepaid. I'm just writing prepaid insurance. You know the amount is 50, so the balance here is prepaid deducted, and we have to incorporate the prepaid insurance in part of asset. It's an asset, so we'll incorporate that in asset. Insurance prepaid, or again I'm writing prepaid insurance. Prepaid insurance. Prepaid insurance. The amount is 50. Okay. So the next thing we need to do is we have adjustment for loans. You can see loans, so we have to add interest. Okay, interest due or interest outstanding, you can say. So this is 900 rupees. So the total amount is added, both of them. So this is the amount, and we have to incorporate the outstanding interest rather. interest due in expense. Now this is we have made the entries like prepaid insurance, deducted from insurance, and interest due. This is all because of use of the matching principle, as matching principle states that the revenue and the expenditure for that particular year should be matched. So please, I think you must be knowing that, so I didn't need to explain that much. Okay, so we have incorporated interest due, and what we have here left is closing stock. So we need to incorporate the closing stock. We can just add the closing stock in this. Here we just add it into this. The amount of closing stock will be added here. So the amount is 70,000, and we have closing stock as asset also, so we'll incorporate that on the asset section, asset side also. 70,000. Yes. Okay, so what we have to do is like we are left with only bad debts and its adjustment. So first we need to do is okay, I guess rent and taxes. I just missed out the rent and taxes also have an adjustment, so please just put the amount here, and we have adjustment for it also. We have rent outstanding, so that would be added. So add the outstanding rent outstanding, and that would be incorporated. That would be incorporated. So we write the rent outstanding, which is 150. So we write 150, and the amount is added to the total rent. So we have it here. Now we are left with only bad debts. So what we do in bad debts is we'll add the new provision and deduct the old provision, because the old provision already new provision already incorporates the old provision. So we are just adding the new provision and deducting the old provision. So there shouldn't be the repetition of the same amount, or what you can say is double counting. So the new provision is 8274, and the old provision which we had is, which was written, was, so let's take old provision was, which was written in the trial balance, was 4650. So the amount would be taken from the trial balance. So we have this. Now what we need to do is to incorporate that in your main balance. So here we have. Now add the new provision in this reserve, rather deduct it from bad debts, deduct the bad debts from book debts. So we have reserves for bad debts. And what we have here is 8274. So the amount would be this deducted this. So now we are done with all the adjustments. Now we need to calculate the gross profit. Just write the balance amount, sum. The sum is here. Write take the sum of the other side. What we have here is we sum this amount. Now we take the difference. The difference amount is our gross profit, so we write it gross profit, and this would be carried down. So the gross profit amount is 86610. Now summing both the side would get you the same amount. So we have balanced our trading account. Now what we need to do is just bring down this gross profit. The amount is 86610. We'll balance the profit and loss account now, so we'll take the sum again. Okay, so take the sum on the opposite side, or you can say the debit side. So this is the amount, take the difference. Difference amount would be your net profit. So this is your net profit carried down, and the amount is 61176. So sum on both sides now would be same. Now we have balanced our profit and loss account also. So now we'll add this net profit here. Net profit is 61176. Now we'll balance both the sides. We'll take the sum on both the sides. So just take the sum. And we haven't calculated the main sum for capital, so we'll just add the net profit and deduct the drawings. So we'll sum both the side, debit and credit. We'll see the balance. The balance should be same on both the side for a perfect numerical of final accounts. So we are missing out something. Let me check. Let me cross check things. Okay, I have missed out the rent outstanding. I have not incorporated the rent outstanding, which has been incorporated in the profit and loss account. So just let me add the rent outstanding. It's outstanding, so we need to pay. This is a liability, so we'll add it on the liability side. Now we on the both side of the balance sheet we have the same amount, so the amount is balanced now. Both the sides are balanced now, debit and credit side. So we have completed this numerical successfully. Hope this numerical helps you understand how to prepare balance sheet and profit and loss account along with adjustments. Thank you for watching this video.